Welcome back. You're still tuned into Markets at Noon right here on ET Now. And let's put the spotlight on Aeroflex Industries. The stock, as we speak, is up more than 11%, in fact 12%. And on the back of two news pieces. One, of course, they've done preferential allotment to marquee investors, which includes the likes of Ashish Kacholia. But apart from that, they've also announced some capex plans. So first up, let's talk about capex, where they've expanded facilities for the manufacturing of liquid cooling skids for data centers. Currently, their capacity stands at about 2,000 pieces a year, which they are looking to increase it by 13,000 pieces per year, and this will be done by June 2026. Other than that, they will also be installing robotic welding lines and automatic welding stations for manufacturing assemblies of flexible stainless steel hoses. This, of course, the company has said it will not directly increase their capacity, but this will automate the process relating to assemblies of SS hoses. So that is the added advantage. The company's margins will improve, although the capacity will not improve directly, but their margins are likely to improve on account of this operational benefit that the company will enjoy. This will entail a total investment of about 98 crore rupees. Other than that, as I mentioned, the company has also issued preferential shares to marquee investors, and this includes the likes of Ashish Kacholia, and that is precisely the reason the stock is surging in trade today. As I mentioned, the stock is up nearly 13% on the back of this news piece. So yes, Aeroflex Industries in focus. The stock is up 13% on the back of preferential allotment to Ashish Kacholia.
Okay, let's refocus from that and once again revisit the top news of this hour, that is MUFG going to buy 20% stake in Shriram Finance. We have a guest joining us on the show on the back of that. Mr. R. Gopalan is joining us. Sir, thank you for your time. Give us a sense of what this means for Shriram Finance in terms of their equity dilution and what impact this could have going ahead in terms of management restructuring, if any, that needs to take place.
I believe, Shriram Finance has been doing well in the vehicle finance, and as an NBFC, it has been doing very well and having a good margin, NIM, and they have been, their portfolios, they are increasing their overall AUM and things like that. They are doing extremely well. Now, this amount of money coming in will certainly help them to get their equity, because in any case, if you want to expand the business in NBFC, you need to have more equity. So the CRAR of, people are looking at an NBFC, in the finance NBFCs, we are looking at a CRAR of 18, 19, 20. So to reach that kind of a level, obviously you need equity inflow. And coming as it is from a Japanese entity, it's going to help as it will be a stable money, which will be there. Plus, there will be good practices, which, Shriram is doing well, but the more good practices will be introduced into the company. And maybe, I don't know whether the deal includes a board seat or not. I'm not very sure. There should be, because with this kind of a thing, there will certainly be a board seat. And the governance systems in the company will improve, will go up further as a result of this kind of an investment. All in all, good for the NBFC market, good for consumers, and also good for the company.
Ankur, this side. Now, this is the second major Japanese investment which is going to happen in India. I want to understand that how government is more comfortable through this route.
Well, government has indicated that, they are open to investment in this sector. I think it's all opened up. And in the finance business, you must understand that we require, it's an equity guzzler kind of an industry. So you need to have more equity. NBFC business requires equity because of the CRAR, which we have to maintain. We have to have equity coming in. And Japanese, they do investment after a deep study of both the markets as well as the company. They do a deep study before they enter into these kind of investments. And when they come, they stay for a long period of time. So to that extent, it's a great advantage for the NBFCs to whom this money is with whom this money is being invested, as well as for the market, because then even the customers of Shriram Finance can be sure that, well, there is going to be some amount of growth that is going to happen on the AUM, so the customers will be benefited in the process. So I think all in all, it's a good one, and I believe that these kind of investments will certainly help the entire ecosystem of NBFCs in the country.
I also want to understand what has exactly changed vis-a-vis if I compare just with last year. Last year we were discussing whether or not 51% stake should be there in IDBI Bank. Now we can see two deals in finance sector, one being RBL Bank and now Shriram Finance. How has the scenario changed now?
How does
the scenario change now? Because we understood earlier that Reserve Bank of India particularly was not very comfortable, as I gave you example of IDBI Bank where there was due diligence which is still going on for a long time. Do you think it will pave the way for other deals as well? And once again I'll ask that question, that do you think the scenario have changed in terms of how government is looking at these deals?
Well, IDBI is a bank. Shriram Finance is a non-financial NBFC. It's a NBFC. So there's a difference, number one. And NBFCs, obviously, they have a way of, reaching the customers, which banks, they have a deep a depth in the market, which banks may not be in a position to kind of reach that kind of a depth. Because the structure of entire funding and the entire financing of NBFCs and banks are slightly different. So to that extent, NBFCs require a good amount of funding for their operations. And they are into vehicle loans and other, personal loans and those kind of things they are doing. So they have deep thing, they have experience. They go into the market very deeply, which banks cannot do. And banks are there to do big ticket items funding, whereas NBFCs are not in that particular sector. So, all in all, one set of banks funding, which is a personal loans kind of a thing, that is where the NBFCs are really focusing on, apart from SMEs, which they are focusing on. So, the customer clientele to whom these people cater to are generally, a subset of what the banks do. And NBFCs do in greater depth as compared to the banks. So, there is a scenario change. There is change in the way, there is the customers whom each one of them handle is different. And these kind of customers require different kind of a treatment, which NBFCs can give in a much better way compared to the bank. So, but as far as the scenario is concerned, it's nice that the entire credit system grows. The credit, becomes bigger, and more people use the credit for occupations for which they can generate income, and the economy can grow.
Mr. Gopalan, point well taken. Of course, NBFCs are the medium where the last mile reach can be there. I also want to welcome Mr. R. Gandhi to the panel, and other panelists are also joining in. Mr. Gandhi, I want to understand from you the perspective of Reserve Bank of India per se, as we were discussing earlier. Do you think as far as NBFCs are concerned, we have seen last year that there were so many actions which were taken by Reserve Bank of India. The scenario is changing, and we can see the deals now, and more can happen in future.
The scenario has not changed. The RBI regulations from beginning for quite some time, it is there that for stakes in the Indian banks or financial institutions, a large stakeholder, so there can be a proposition. The policy permits that. Only then the right fit and proper institution looks like in the recent times. RBI has been convinced about such a large stake by foreign institution, and it has allowed. So that's why we have to read it. That is the right fit and proper entity. If they would be asking for greater stake in Indian financial institution, and that is a bank or NBFC, looks like the bank would be approving. That's that's the reading I have.
Right. We're also joined by Gurmeet Chadha from Complete Circle. Great having you here, Gurmeet. Also, Rajesh Sehgal, Equanimity Ventures, joining us during this time. Gurmeet, how do you see this deal? One, from a Shriram Finance specific perspective, there is some liquidity, some excess liquidity build up already, which Shriram Finance has seen, which should likely aid margins going forward. Further, this should actually aid margins because this is a large equity raise which Shriram is doing. But even if you look at it from a margin standpoint of cost of funds likely to come off because MUFG is a big deal coming in.
No, absolutely. I think it's a huge vote of confidence, not only for Shriram, which is amongst one of the better run financial entities in India, but also for the overall system. Now, with this deal, the overall deal size, if you add RBL, Yes Bank, and Samman Capital, Federal Bank, it's gone upwards of $10 billion. And typically, this tells you that when you're investing in a financial sector of a company, it signals change of regulatory stance. It signals that the growth is likely to pick up pace because finance is the barometer for the economic growth. And particularly for Shriram, it may lead to a rating upgrade. If you see the current cost of funds is more about 8.7, 8.8. They had excess liquidity which they utilized, which was positively reflected in last quarter. Operational performance looks very good, and with this kind of capital, they're already at 20%. Ratio with this, obviously. So it's not liquidity, it's the growth capital. So I see, there is a good chance of a rating upgrade. There is a good chance of cost of funds coming down, and this is significant growth capital. And overall, it's come at a very good time when India is facing, investment outflows, or especially on the secondary market to FPIs. So it's a huge vote of confidence in my view. And I think you will see more re-rating of Shriram as a group, and it also has a very strong impact on other well-run NBFCs. The business will become more competitive. The larger ones with better cost of funds in an environment like this will now stand to have advantage over others. So the likes of, let's say, a Jio Finance or a Bajaj, Chola, Poonawalla, where cost of funds is already low, and now with Shriram, I think will have some edge over others. So it's the bigger guys will get more advantage now.
Right. Gurmeet, stay with us. I want to come to you, Mr. Gandhi. How does the regulatory approvals move now? How much of the time do you think it will take for deal to actually come through?
That is a detailed process, as I know, Reserve Bank will be undertaking with reference to conducting fit and proper. There is no shortcut, or they are not going to reduce their standards in terms of checking. I would presume that time-wise it will be normal. Only the thing is that now it looks that the large, it is actually the foreign institution, they are taking keen interest in coming to India. That's a welcome thing. Earlier there was no attempt by them. It was only people used to mention, but there was no serious actual attempt and a request to Reserve Bank for approving. Now it looks like they are really serious and they are making application. The Reserve Bank is assessing their fit and proper and approving it. That's why I don't think time-wise it is unlikely they will reduce the fit and proper assessment required the time.
Mr. Gandhi, I believe I have to let you go. So thank you so much for joining us and giving us this perspective. Gurmeet, what do you make of the pricing here? 840 rupees a piece. This is just about 2 times book 1 year forward when you're looking at it. And this is a 3% ROA business that it does. But of course, the equity dilution will likely lead to ROE dilution as well. So how should one look at the construct as we are currently?
Yeah, I think it will be transient. Of course, with such primary infusion, there will be near-term impact. But as I said, I foresee a rating upgrade or a positive rating event due to this infusion. The overall, I think, as I said, it's one of the top quartile NBFCs, very well-run entities, and I think they are managing credit costs well. Last conference call, they did post earnings. They did mention about how stage 3 assets are being controlled. Credit cost has been sub 2%, which is good, considering different cycles of credit we have seen, in COVID and post-COVID. And as I said, I think the government is also of the view, I am of the view, I think the overall bond yields in India will come off. I think you will gradually see, the yields dropping significantly across the curve. And if you have growth capital, you have better source of funds, lower cost of funds. That's a big advantage to really press the lever when it comes to as credit growth and economic growth picks up. So I think it's a very welcome development, and I think it will infuse more confidence in terms of more FDI coming in India. Banking is just a beginning. I think the spillover will come in other sectors as well.
And Gurmeet, is there going to be a seismic shift in terms of ownership, you reckon, as a result of this transaction? Because there's also a suggestion that the Shriram founders are looking to explore possible restructuring of their holdings, which will likely mean that MUFG may have a larger participation in Shriram going forward as well, and the way in which Shriram is being run. This could be a huge development from a Shriram standpoint, right?
Could be a little early to say on that. But as I said, the group is done very well. They're also stitching together a very good team in wealth management. A lot of very good team has been hired. A lot of ex-bankers I know. A lot of RSUs being given to get more ownership in the business. The NBFC, anyways, as I said, is amongst the better than NBFCs. Even if you see their gold loan portfolio, commercial loan portfolio, passenger portfolio, it's seeing a good uptake. MSME portfolio is getting back on track. So as I said, operational performance pickup, growth capital coming in, possible rating upgrade, more better investors like these coming in, augurs well from a long-term point of view. And as I said, this will have an positive impact on the entire financial sector. And the timing, as I said, is pretty good. So pretty constructive, as I said, on the NBFCs, especially the tier 1 NBFCs in India.
Right. Mr. Gopalan, I want to come to you for your final word on this discussion. Now, 20% is already there, that is announced. Do you think there is a scope open for more stake purchase, and not just in Shriram Finance, but other NBFCs as well?
Well, for NBFCs to grow, they need growth capital, and the cost of funds have to be kept as low as possible. And when you enter into different types of loans like gold loans and MSMEs and cross-selling and consumer durables and those kind of things, you get into vehicle loans. Obviously, each one has its own way in which it operates. So one needs to have a great, control and also have a philosophy for each one of them verticals separately. So I have a feeling that, the Shriram is good. In any case, there is no problem. But foreign investment coming in will certainly give a stamp of some kind of performance rating for Shriram. And as Guneet mentioned, the important thing is for the funds cost to go down is your rating. As the rating becomes better and better, the cost of funds go down. So to that extent, the investment by the Japanese entity is going to be very, very useful for Shriram. And for the country, I think this is a very good augury because this is going to be a beginning of maybe a number of cases wherein foreign investment can flow in, and the entire financial sector is doing reasonably well now. And this kind of an investment by foreign entities is an indication that the kind of confidence they have in Indian financial system, that is a big take, I would assume, on this particular deal, from this particular deal.
All right, Mr. Gopalan, Mr. Gandhi, as well as Gurmeet and Mr. Rajesh Sehgal, thank you so much for joining at this hour with your views. With this, one of the biggest deal which has been announced in the finance sector, it is time to take a very quick break. After the break, the analysis will continue.